to the monthly Consumer Issues program hosted by Cornell Cooperative Extension of Tompkins County. On the second Thursday of each month, we're joined by New York State Assistant Attorney General Michael Danaher, who makes a presentation on a topic of consumer interest. Today, he'll provide us with an update on consumer credit issues. After his presentation, Mr. Danaher will answer questions that viewers have submitted to CCE Tompkins in the Zoom chat box. This presentation also will be available on the CCE Tompkins YouTube channel and will be broadcast next month on Mondays on Public Access Channel 15. Thank you for joining us today. And now here is New York State Assistant Attorney General Michael Danaher with today's program.
Good morning, everyone. Welcome to our monthly Consumer Issues program, which we've been doing for 23 years. And we ask that you join us when we do get back into a physical presence. I hope that we'll be able to see each other. But in the meantime, if there are any questions, as Sandy indicated at the outset, please send them through the chat and we'll try to address those issues. Being the beginning of the year as we tape this, it's an appropriate topic to talk about consumer credit issues. We've become a very credit-based society over the years that formerly, there's any number of reasons, but formerly it was always that you could always do things in cash now, but I think nowadays that people are becoming much more comfortable with not carrying around cash. People are becoming much more comfortable in purchasing things online where you can't necessarily send cash around. So it's becoming more and more necessary that we have some type of credit. And as good consumers, we want to keep our credit as good as we can. I did some research ahead of our conversation here today just to kind of take a look at things. Many of you may have been reading in the newspapers and seeing reports that as a result of this COVID pandemic that we've been involved in, there has been a little bit of a trend, surprising in some respects, regarding credit and finance. And the big area for that is in credit card debt. Over the last year, credit card debt in the United States has actually, or credit card balances, the debt carried over a period of time, not the use of credit cards, but the overall debt that has been carried over a period of time, has actually decreased a significant amount, 6.34% since 2019, that our credit card debt has gone down. On average, a household carries a little over $7,000 in credit card debt. That can be particularly problematic because credit card debt is probably the most expensive debt that people carry. Overall, households in the United States carry approximately $145,000 in debt, overall debt, all types of debt. And that's actually been an increase. So we have a decrease in credit card debt, but we've actually overall increased our debt. And that is a result of mortgage debt has gone up 4.5%. Auto loan debt has gone up almost 3.5%. And student loan debt has gone up almost 3.5%. So you can see that we're still, even in this period of time where COVID, where the credit card debt went down, people are going out less, spending less with the credit card and that sort of thing. But people have increased mortgages because they've done additions to their house, so they've bought a bigger house. They have purchased automobiles, and the student debt, loan debt hasn't gone down much at all. So we are convenience-based. Formerly, items that maybe we would have purchased with cash, smaller items have now become more expensive. People are spending money on cars, computers, other household goods, televisions that may be more expensive. And so they're not carrying around, I know that prices of televisions have gone down markedly, but you go out and buy a $500 television. You're usually not walking around with $500 in cash. So we're using our credit cards for those sorts of things. It's more safe to not carry cash around with us. We may need money for emergency things that are more expensive, hospital bills, auto repairs, having to purchase a new car, having to travel to see a sick relative or to help out with a family somewhere. And as a result, we don't have that cash. And how do we cover it? We cover it through different types of credit. Credit scams can be particularly difficult to identify, especially for a layperson who isn't involved in that type of scam business. And they can be oftentimes difficult to identify. And when you take the theory of credit, which is actually a loan, whether you use a credit card, you go to make a formal application to the bank for a loan, it is still a loan. And we expect that when we're going to get the typical loan, we have to fill out applications and things like that. And the interesting that we have is that when we use credit, we do have to pay ultimately, but we don't have to pay today. And so with credit scams, they're playing on the fact that they're going to steal the money from you today if it's a money thing that they're going to steal, as compared to identity theft, which we'll talk about. They'll steal it from you today, but you won't realize it because you're not thinking about this credit debt that you have to pay sometime in the future. And you don't find out till much later that this was actually a scam. And by then, the scam artists are gone. They've washed their hands. They've disappeared. And all of a sudden, we're left holding the bag. So sometimes it can be difficult to identify the scam to begin with, and then not find out about it until much later. It may take also a long time to straighten out. That's why we have always advocated at our sessions at Cornell Cooperative Extension that we have to be good consumers. We have to be good consumers of credit, stay on top of things, be aware of what's going on, and go a long way toward protecting ourselves. In the credit realm, protecting ourselves is very important because in some instances, we don't know that we're going to need the credit till we absolutely need it. For example, we need to buy something, and a car. We go out to buy a car. We need it. We need it to get to work. We need it to take a relative to the doctors. We need that. And then we go to get the car thinking it's going to be an easy, done deal. And we find out that there's a problem with our credit. We're unable to get the loan, and then we're stuck. We can't get the car repaired. We can't get the car. We can't do things that we need to do, and then it takes a while to clean these things up, and we're in trouble. So if we stay on top of that, and a good consumer will stay on top of that, you go a long way toward avoiding that particular problem. As I mentioned earlier when I started talking about one of the big issues with credit scams, credit issue scams, is identity theft. It's by far the largest area of fraud that's occurring with the use of credit. We frequently take our credit for granted. It's always there when we need it. Don't always need it. When we do need it, we can always get it. Credit card applications come to us all the time. You see now with the internet, there's all types of ways to go on the internet to obtain credit. Credit cards, we don't usually think twice about it when we need it, and then all of a sudden we might need a car loan, car repair, a home purchase, or whatever, and we find out that our identity was stolen and our credit was ruined. What is identity theft? We've talked about it a lot here, but we'll go through it a little bit. It's stealing your personal identification information, which is names, addresses, employment information, bank account information, credit card information, anything that's personal to you, your mother's maiden name, your first dog's name, your second cousin's name, the oldest sibling's name. All of that information is personal to you. Do not give it out to anyone that you don't know. We use a really broad definition for person you don't know. Even though you receive an email from somebody you think you know, it may not be the person who it professes to be. And so you want to make sure that you are really dealing with the person that you expect it to be. In this society, we're becoming less face-to-face as far as our transaction goes. We're buying all kinds of things on the internet. More so now as a result of this COVID pandemic than we ever expected before. We're using ATM machines to get cash. We don't have to go to the bank. I'll tell you from my example is my workday is long enough that I am working the entire time that normal banks are open. It's rare, unless I leave the office, which I'll do, to go down to the bank or make a trip to the bank. The bank's not open at the time, and I may need money in the evening time, or I can just stop at a machine, punch in some numbers, and it gives me cash. The purchases, like I said, are astronomically increased over the internet. We saw during the holiday season that the purchases over the internet, and because of this COVID pandemic, society, although we had moved toward a more internet-based society with people buying things, it just exploded. Many retailers had to really scramble to get up to full speed on internet purchases. I mean, people are buying things now and not even walking in the store. I've done that a few times more recently. It's very convenient. Went on, ordered something. I was told it was ready. I went out to the park. I drove to the store. I sat in the parking lot, sent them a text message that I was there, and somebody came out and handed it to me. We're just becoming very convenience-based. And as a result, in order to get those items, we have less personal contact where the people we are dealing with, we can evaluate face-to-face, or they can evaluate us face-to-face. And so there's a lot of trust there. And sometimes that's what scam artists grab a hold of. Some of the types of personal information, again, are social security numbers, credit card numbers, your date of birth, your address, your mother's maiden name, any employment information that you have. And scam artists latch onto this information. They take out loans or get credit cards in our name. You may never even know that the person went out and got a credit card in your name because you weren't aware of it. You were never notified. And next thing you know, you go to apply for a credit card, apply for a loan, and you get rejected, and you find out there's 5 credit cards that are maxed out in your name that you had no knowledge about. They get the bills sent to a different address. Nobody's calling you until that infamous Dunning call. Mr. Smith, we have this outstanding credit card in your name and the balance is X number of dollars, and why haven't you paid anything? Mr. Smith didn't even know anything about it, yet it was attached to his particular name, and then before you know it, your credit is ruined. So how can we go about protecting ourselves? We keep our personal information private. Don't give out that information to anyone unless you know that person. And again, make sure you know who that is, not just an email that you got from somebody that you think that you know. Keep your credit card information and your Social Security information to yourself. A really good way to be proactive with this is that each of us is entitled to a free copy of our credit report each year from each of the 3 credit reporting agencies: TransUnion, Equifax, and Experian. Those 3 credit reporting agencies. You can go online at annualcreditreport.com, one word, annualcreditreport.com. Put in information about yourself, and you can get from each of the 3 credit reporting agencies a free copy of your credit report. Get it, look it over, make sure everything on there is yours. If it's not, get it off. if you want to cancel a credit card, let's say, or a loan, like you get your credit report and you see, oh, I've got this old outstanding credit card that I never use anymore. If you don't use it, close it. What you do is you contact the creditor, the bank that the credit card is with, and cancel it. Don't just rip up the card because the account still exists. It may show up in your credit report as inactive, but that doesn't mean that it doesn't still exist. Cancel it. There's been some comments that, well, if I close all my credit cards, first of all, you don't have to close them all, just the ones that you aren't using. But if I close my credit card, that's going to be a negative hit to my credit score. It may be for a small amount for a short period of time, but in weighing it, the better thing is if you don't use it, close it out. It is good for your credit, credit score and credit history to have some credit. You just don't need oodles and oodles and oodles of credit. So get a periodic check of your credit report. Make sure that everything on it is accurate. Review it, go through it. It's not that hard to understand. Another very important thing is review all your statements that you receive. Review them. In my household, close is not good enough. So if you look at the credit card, be like, yeah, that's pretty close. No, you look at it and make sure every charge on there is your charge. If it's not, challenge it immediately. These problems don't go away. They always get bigger. And not a theory, but a fact is that with scams, and this could be noted, this is noted in the forensic accounting world, is that if there's a misappropriation in a business, where it might be picked up on an audit or things like that, it's always true. They always start out small, and then once they can get away with it, they always get larger. So if there's a business where, let's say, an employee is ripping off the business, traditionally what will happen is it'll start small and it tends to get bigger over time. Same with scams and in the credit world. Somebody will start small on a credit hit, and once they see it's successful, they will progressively get larger. Anecdotally, what will end up happening if somebody gets a credit card, the one thing that they don't want to do, if someone steals a credit card, the one thing they don't want to do is get caught, of course. So what will they do? They won't go and do a transaction with somebody face to face. They might go to a pay at the pump and stick the credit card in and see if it works so that they can get gas. And once they realize that it is actually still an active card and working, they will then run down and start charging more and more and more against that card. So the important thing is keep an eye on your statements. When they come in, check every charge against that credit card. Check every deposit and withdrawal and check from your bank statement. Make sure they are all yours. Otherwise, immediately challenge them, because if you get it early, you could stop something that could grow over a period of time. Let's talk about credit generally too. And a lot of people think, oh, credit, it's all money and interest rates and payments and this, that, and the other thing. And I'm not good with numbers. I'm not good with credit card stuff, will be the explanation. But it really is incumbent upon us to understand it, and it is not that difficult. When dealing with credit, all that is borrowing money. A credit card is borrowing money. You don't think of it. You take this piece of plastic and you give it to the store clerk and they run it. But actually what's happening is a bank is giving you a loan for a short period of time to buy this thing you're buying, and you have to pay it back. With credit cards, or revolving lines of credit is what they're called, you have a certain period of time to pay that without, one, incurring a penalty for not paying anything, or two, paying any interest on the money that you borrow. Just like any other loan, you have to pay interest. That's the cost of borrowing money, is the interest. And what I've seen lots of times with consumers that don't understand credit, they don't focus on the right things. Let's use, for our example, a loan. Let's say you're buying a car. I can't tell you the number of consumers that the only thing they focus on is how much the monthly payment is. And really, that's the last thing that we should be focusing on, because the borrowing of money, the acquiring of credit, are a function of three simple things. One is the amount you're borrowing. Two, the length of time that you're going to take to pay back the loan. And three, the interest rate that you are being charged by the bank, we'll use it as a bank, finance company, to borrow the money. If it's just those three things, if you take into account all three of those things rather than a monthly payment, you'll be a really good consumer and protect your interests as best you can. And here's the example. You go in to buy a car, and one of the first things the car salesperson will ask you is, how much can you afford? How much each month? And you're saying, okay, I got to keep my car payment at $275. That's what I have to keep it at. Well, if the person that's giving you credit can adjust one of those three factors, the amount you're borrowing, the length of time that you're borrowing it, and the interest rate, they can work it to get you to that $275. How would they do that? They could do that by, one, borrowing less money. Two, get you a lower interest rate. Or three, and this is the big thing, stretching the loan out longer. The longer the loan, the lower the payment, because you can pay it, if you pay a little bit less each month, but you pay it for a lot more months, then you can still pay off the debt. But what you're doing by doing that is the amount that the total amount that you're ultimately paying back with the principal that you borrowed and then all the interest on top can be astronomical. You can save so much money by paying things off earlier. You may have to pay a little bit more, but by paying a little bit more, the total amount that you're paying out of pocket can be thousands of dollars less than if you stretched it out. So the monthly payment, don't get me wrong, is important. If you can't afford it, you can't afford it. That's just the way it is. But the longer you stretch a credit or loan out, the total dollars you're paying are significantly more. So you really need to take those three things into an account. The things that you need to understand about what you're being charged are, on credit card payments, what's the minimum payment? The minimum payment is really the minimum that you have to pay. If you just pay the minimum payment every month, it will take you forever to pay this debt off, and consequently, the total amount that you have to pay is going to be much larger. You need to see if there are any upfront fees for that credit. They can call them all different types of terms: origination fee, application fees, things like that. See how much those are. What happens if you don't make timely payments? We know with credit cards, the late payment fee, the fee for not making that minimum payment, is really, really high. So that adds to how much total dollars out of pocket you have to pay. How long do you have to pay before you incur any interest fees? With credit cards, you usually have a grace period. I don't know how long it is, 10 days, 20 days from the time that you get the bill till you have to pay it off. Make sure you pay it. Some credit that is out there, if you go, I see it frequently in an area where, let's, again, another example, where you go to buy furniture and they have this deal where if you pay, there's no interest for 13 months, no interest for a year and a month. And you think, wow, no interest, that's great. And so you're using somebody else's number. You have to be careful about what they mean by no interest. What it usually means is interest is accruing on that money, but if you pay the whole thing off in 13 months or less, all the interest gets wiped out. What that means is some people think, okay, I'll make the monthly payment or a little bit less than what I need to pay this off in 13 months. And then whatever's left over at the end of 13 months, then interest will attach to that and it'll be a smaller balance, so it won't be bad. That's not how these work. What happens is if you don't pay it all off in the 13 months, all of that interest we talked about that was accumulating gets stuck on it at the end. So you not only have to pay back what remaining principal balance you own, but all of the interest on the loan for the length of time from day one, which can be a lot. So you need to keep aware of that. If you undertake that type of a credit loan program, great. But what you have to do is make sure you pay the whole thing off before the expiration of the grace period. Because if you don't, you are going to get all of that interest. And I will tell you, in most instances, the interest rates on those types of loans are pretty high because the financial institution don't make a lot of money if everybody pays the thing off early, because there's no interest attached to you. What ends up happening is that they make a lot of money for those few people who don't get it paid off on time. So do what you can to get that taken care of. There are other types of scams associated with credit. A few of them are credit repair companies or debt settlement companies. I think all of us have seen those ads on television, or we see an ad on the internet, or maybe we get a telephone call, that robocall that says, reduce the interest rates on your credit card, those sorts of things. Be very careful about those. Credit repair companies who say, we can fix your credit for you. I know your credit's bad, but come to us and we can fix that for you. Be very wary about those companies. Likewise, debt settlement companies. Debt settlement companies are ones that say, we can help you. You have more than $15,000 in credit card debt. Call this 1-800 number. We can straighten that out for you. Be very careful about those entities. One is, you should not be charged any upfront fees for their services. If they contact you and you need to read all of the fine print to see what the terms and conditions are and whether or not those initial payments that you are sending to them so that they can take care of your creditors, that money is going directly to your creditors and not directly into the pocket of the debt settlement company or the credit repair company, where they aren't going to do anything for you for 6 months. While you're paying them, they're just taking the money up in fees. That's illegal, and they should not be doing that sort of thing. Really, if you have a credit problem and you need to resolve that, heavy credit card debt, there are reputable local credit service companies that can assist you or give you guidance. These debt settlement companies, what they do is they accumulate a pool of money using your monthly payments. Once they accumulate a pool enough to pay off one of your credit cards, it may not be the full amount that you think you owe, What they do is they'll call the company, the creditor up and say, hey, look, I've got a pool of money. It looks like you're owed $5,000. Now, I have a pool of money here that of $2,500. It's $2,500 less than what you say you're owed. I can send you a check tomorrow as long as you extinguish the entire debt. That's what they do. And the reason why I say that to you is you could do the same thing yourself. You can contact your creditor and say, look, I understand I've gotten behind. I understand that I have a large debt. Most of that debt is interest. I really only had $1,000 in debt, but I haven't paid in so long that I owe $3,000. I'll tell you what, I've accumulated $1,200. I'll give you the $1,200, but I have to have something in writing from you that tells me that that's going to completely and pay off that particular debt. And then they can agree to it or not agree to it. The thing is, with the debt settlement companies, it works the same way. The creditor doesn't have to say, I'll take it. It's the debt settlement company saying to them, look, this is what I have, take it or leave it. And they work out a deal. For that service, you're paying them a significant amount of money. So you could actually do it yourself. If you don't have the wherewithal to do it, there are not-for-profit entities out there that can attempt to assist you. And I think if you contact Cornell Cooperative Extension, and if you look around, you can find local agencies, not-for-profit groups that may be able to give you some assistance in that regard. So be very careful about these credit repair companies. We see them on TV. They can be quite expensive and not be very successful. Next thing is scams are advance fee loan scams. That's where you have to pay an advance fee to get a loan. First of all, you should not be charged in advance for to get a loan. You get false promises of low interest rates on these loans. Oftentimes they're bogus. They disappear after you pay the advance fee and you never get the loan, or you don't get the loan under the terms that they had said to you. This is also a ripe area for what we talked about earlier, which is identity theft, which we don't think twice about giving out personal information when we have to get a loan. Think about it. You go in to make a loan, you make a loan application. So you name, address, telephone number, where you have bank accounts, how much money's in the bank, where do you work, how much you're getting paid, because the finance company wants to know if you're going to be able to repay the loan. What other types of credit card debt do you have? Other debt do you have? All these sorts of things. We don't think about it. We give them our social security numbers. We do all that stuff. Well, if it's a scammer, you could be giving all of your personal information unknowingly to someone who's actually a scam artist. That's why it's really important to do some research on who it is that you're getting credit from before you give out any personal information. Another area of fraud is credit insurance scams. Credit insurance is where you get insurance to pay the loan or credit off in the case of a disaster, for lack of a better term. It could be a death, it could be a disability, it could be unemployment, some type of catastrophe for you. You can't pay the loan off because of some circumstance. So there's insurance out there that's available for you. The scams could be that they collect money for that insurance and they really aren't an insurance company, so they don't offer it and they disappear. So they have your money and you don't have the protection. So research the company. Sometimes when you go to get a loan, let's say you go to get a personal loan at the bank, they may give you an option to get credit insurance. Decide whether or not you want to do that. Understand that with credit insurance, the only thing the insurance does is pay off that debt. The example I like to use is if you pay every month on a 5-year loan and you only have 1 month to go and something happens, you become disabled, you lose your job, and you had purchased credit insurance, The only thing that credit insurance will do is make that last payment. Unlike other types of, let's say a disability insurance policy. If you buy a disability insurance policy, you'll get a certain benefit. It isn't just necessarily to pay off this loan. You get a certain benefit. You can use some of that benefit to pay off this loan, but then you'll continue to have that insurance and those payments for as long as the disability exists, depending on what your contract says. As a result, credit insurance will be a little bit less because the amount the credit insurance would have to pay reduces as long as you continue to pay it over the life of the loan. But with credit insurance scams themselves, it could be that they're just getting your money and then not providing any of the credit. Make sure that if you do get credit insurance, that one, it's optional. It should not be mandatory. They should not impose this obligation. Whoever's giving the loan should not impose an obligation that you have to get the credit insurance. Make sure that one, you need it, and two, that you know all the terms and conditions when you get it. Make sure you have the right to cancel it. So if at some point in time you want to cancel and stop making the payments on the credit insurance portion of it, that you have the ability to do so. Another area of credit where their scams occur is unauthorized billing. Some of the areas that can happen is, one is somebody could be sending you a bill saying you owe this money. That's an outright scam. So again, being a good consumer, staying on top of what you owe and what you don't owe. When you get that bill or you get a telephone call, someone saying, I'm going to turn you over to the police, one, that's illegal. You can't be arrested for owing money. But somebody contacts you and say, you owe this debt and I need it paid right now and you need to send it, or we're going to ruin your credit, or whatever explanation is used. One, make sure that you know that you owe that debt. Stay on top of it. Before you pay anything, do not send money to anyone unless you know the money is absolutely due and the exact amount that's absolutely due. Another area similar to this is auto deductions. And a lot of people say, I don't want the hassle of getting a bill each month. Just automatically take it out of my bank account. Automatically charge my credit card. That's fine, but make sure you stay on top of it. You can't just say, okay, I just get taken care of every month. Review your statements when they come in each month. Review the payments as it comes in each month. Make sure that nothing's being tacked onto to the charge. Keep track of that there's no unauthorized increase in charges for this, things that you never agreed to. Cross-check the bill with your payments. Make sure that the payments that you're making, that maybe on your bank statement, show that you owe and you've agreed to have $100 every month go out to XYZ to cover this debt. Make sure it's only $100 on your bank statement. Make sure it's not 110, 125. And if it is, get on it right away. Cross-check. Another area similar to or a part of identity theft in the credit realm is phishing. So we get emails all the time from people, oh, get this credit and things, get this credit card, get this, get that. Before you respond to that, make sure you know who it is. Do not give out personal information. Again, we fall back to what I talked about identity theft is in this phishing example is we expect that when we're getting a loan, we have to provide some personal information. And in giving out that personal information, we can get into a lot of trouble if we're not giving it to people that we know and that we trust. We have to use our credit well. If one way that we can understand that we're using it well is to stay on top of it. I talked about getting a copy of our credit report each year. And there's actually federal law that governs credit reports. It's called the Fair Credit Reporting Act. It was enacted to safeguard and keep our information private. The statute is very detailed and very long. but there are certain things that you need to know about your credit, and that is, one, our credit information and credit reports can only be given out for certain designated purposes. One is with our written permission. Another one is where there is going to be an extension of credit, or there is a collection of debt. That's the only way people can get copies of our credit reports, is if we authorize it. If, for employment purposes, for getting a loan purposes, for the collection of debts, we get pre-approved credit offers. How do those things work? It's through our credit reports. What happens is the person, that entity that wants to extend credit to us will send a general request to the credit reporting agencies. We are going to send out this solicitation for a credit card, and we want people that fall within these parameters. So what happens is they don't necessarily know your or my individual credit situation or individual credit report, but we do fall within broad categories: income over a certain amount, credit score of a certain amount, those sorts of things. And then we get these things in the mail, say, hey, you have this pre-approved credit report or credit card, 0% interest for the first 6 months. You'll always see an asterisk on it, on the offer, and it says it's subject to credit verification. That's because they don't have your particular credit information. They just know that you fell within some broad parameters of credit, that they send it to you. So you'll get this offer. They haven't had hands on your credit report yet, but if you do make an application to get this credit card pre-approved offer, the only thing pre-approved means is you fell within the parameters. Then they will do a more updated credit check on you when you actually fill out the forms. The bottom line is, nobody can get your credit report without your permission or for any legitimate reasons. If you get an adverse determination, in other words, you apply for credit, you get turned down, you have the right under the Fair Credit Reporting Act to get a copy of your credit report within 60 days of being denied credit. And you should get notice. You were turned down, you're entitled to a free copy of your credit report. And if you have concerns about that, get it. You have the right to challenge any inaccurate information on your credit report. So when you get that credit report for free each year, you have the right to challenge it. You notify all 3 credit reporting agencies that you challenge the item on your credit report. And you also should notify the creditor, the entity that's listing you as having bad credit, and that the credit reporting agency, the 3, TransUnion, Equifax, and Experian, they have generally 60 days to reinvestigate that credit issue and remove it from your credit report. So you want to stay on top of your credit report. Another point, we often focus on credit score. There's different scores, but one of the common ones that we all hear about is FICO, the Fair-Isaacs credit report. It's a uniform code that the Fair-Isaacs company has created, this algorithm, all these different factors that get spit into your credit report, and they press a button and it comes out with a score. Low, high is 850. The higher your score is just a number. The score is made up of all these factors: how good your credit is, what your income is, your debt to credit score. All these things go in to put out the number. If you have a good number, then the underlying data is probably pretty good. And if you have a bad number, the underlying data is probably not pretty good. So what I encourage you to do is stay aware of the underlying data. What's the underlying data? What debt do you have? Is it valid? Is it up to date? All those things. If you stay on top of that, the number that you get, the credit score you get, will take care of itself. So that underlying data is on your credit report. How much credit do you have? Do you pay? Do you pay on time? Those are the things that you want to stay on top of. And you do that not by following the number, but by following the underlying data that makes up that number. kind of the last thing I want to talk about here is what happens when we get into a credit situation. What happens if we owe money, we can't pay it, we're having some credit problems, we lost our job, we had some health issues, we need to resolve all those. What can the creditor do to collect the money? And that is also governed by law, and you should be aware of it. There is a Fair Debt Collection Act, and it's supposing that you do have a problem paying people back. First of all, if you owe the money, we owe the money. We just owe the money. So we do have to pay it back. However, you have the right not to be subject to abuse or harassment as a result of having to owe money. One is under the Fair Debt Collection Act. They can only contact you between 8 a.m. and 9 p.m. They can't be calling you at 3 o'clock in the morning saying, hey, you owe this money. And if you do get called at 3 o'clock in the morning, it's a scam because it's a violation of the law. They can't contact you at work if they know that it bothers your employer. So if you're not supposed to be contacted while at work, notify whoever contacts you, stop calling me at work. My employer does not allow that. And if they continue to do it, it's a violation of the Fair Debt Collection Act. They can only contact neighbors and relatives to locate you. They cannot use it as a form of harassment, and they can't tell the neighbor or the family member or whomever why they are calling. They can't say, your deadbeat cousin owes money and we're trying to find him. That is a violation of debt collection. The Fair Debt Collection Act. They can only contact third parties to locate you. Once they locate you and they know where you're at, they cannot be contacting other parties. So what some people advising debtors to say is, tell the creditor, I know I owe you money. You know how to contact me. This is where I can be contacted. Do not contact anybody else. If they start contacting others, it would be for no other purpose than to harass you because they already know how to contact you, and it would be a violation of the Fair Debt Collection. They must stop contacting you if you notify them in writing. So if somebody's calling you and harassing you, find out who the debt collector is, the creditor is, and put in writing, please stop contacting me. Put it in writing, keep a copy for yourself, and send it to them. If they continue to contact you for anything other than serving you with a summons and complaint to sue you on the debt, which they would still have the right to do, but sending you, contacting you to try to collect the debt, calling you, anything like that is a violation of the statute. They cannot threaten you with something that they will not do. For instance, if you owe, this is an extreme example, it never happens, but if you extreme example, let's say you owe somebody $10 and they put it to a debt collection. We're gonna sue you, and yet they're not gonna sue you for $10. And also, almost by definition, they're threatening you with something they are not going to do. So they can't threaten you, they can't say, I'm gonna come over and do this, that, or they can't threaten violence at all. They can't threaten, again, anything that they don't intend to keep. They can't imply that they're lawyers or government authorities, police, or anything when in fact they are not. They can't send you papers that look like legal forms when they are not. They can't threaten you with arrest. As I mentioned earlier, you cannot be arrested for owing money. You can't. You don't have a debtor's prison anymore. So you could owe the debt and you could be sued for it. They have the right to do that. But they can't threaten you with arrest. They can't say that they're going to have the police over to get you or anything like that. You can report any abuses to our office, the Attorney General's office. There also may be a private right of action, meaning you may have the right to sue someone who violates the Fair Debt Collection Act. You'd have to contact your own private attorney to discuss those sorts of things. I hope that these issues have addressed many of the issues that will come up related to credit. If you have any concerns or issues related to that or any other consumer-related issue, please feel free to contact our office, the New York State Attorney General's office. We have consumer representatives on staff that can try to answer your questions for you. We cannot give you legal advice. The law does not allow us to do that or to represent individual parties. So you may have to contact your own counsel, which could include legal aid if you meet their income and asset requirements. But we can at least give you some guidance. And if worse came to worse and said, really, that's an issue that you need to be represented on, so you really need to contact your own attorney, we will tell you that. But if we give you other guidance, where to go, things like that, we're happy to do that. That's why we're here. Also, if you get served with papers that you owe money and you're going to be served, you need to get legal counsel. You really, really, really need to get legal counsel. These things don't go away. If you receive those papers, speak to someone about it. Because what happens is if you get served with papers and you don't respond to them, you have a certain amount of time to respond. If you don't respond, the person suing you can get a judgment against you. So it won't hurt to speak to your own legal representative, just to get, even if it's just to get guidance on how the process is, what happens, what can you do, those sorts of things. Again, if you have any consumer-related questions, you can feel free to contact us. We're here for those in the Ithaca region. We're in Binghamton. We cover up through Tompkins County, Cortland County. It's Syracuse. Our Syracuse regional office covers. But the interesting thing is if you use the 800 number, 1-800-771-7755. If you use that number, it will ring in the nearest regional office that can handle your problem. So hopefully we can be of assistance. If there are any questions out there, I'd be glad to address those.
Yes, we actually do have a question.
Great.
Do you have any recommendations for a young person who wants to establish credit? Does being added to a parent's card help establish a credit record, or should they pursue cards in their own name?
I think they should pursue cards in their own name. I know that early on, my kids just get one credit card.
Yeah.
The important thing is to be vigilant about it. And the best thing you can do for your credit score and credit report is use it and pay it off immediately. Don't build up the credit. Don't just make the minimum payment. If you can get the credit card, use the credit, and then pay the balance off every month, that shows a future creditor that you might want to apply to. They think, wow, this person's great. They pay this thing off. We don't ever have to worry about him or her stiffing us on a credit card. And over a period of time, as credit builds up, you buy a car and you borrow the money for the car and you pay that off, your credit score will actually increase. So I think you get it in your own name and be good about it.
Great, thanks. That's good advice. Thanks, Mike, and thanks to those who joined us today for this presentation. Mr. Danaher will be back with us on Thursday, February 11th at 11 a.m. with a presentation on scams targeting senior citizens. You can sign up to get the Zoom link on our website at ccetompkins.org/events. Thanks.